Sarah Palin piles on Bernanke. It's just the latest example of how the Fed is entering the political fray. We'll tell you how right here, right now on the News Hub. Good afternoon and welcome. I'm Simon Constable, and we have a jam-packed show today. We've got a slew of people on. Alan Murray, John Hilton-Rath and Jerry Seib down in Washington, D.C. We're going to go to first. Jerry, Sarah Palin reported by the National Review to ask the Fed and Ben Bernanke to cease and desist. Others also weighing in on QE2. This isn't normal, is it?
No, it's not normal. And, you know, Simon, we knew that that fiscal stimulus was controversial politically. Now we've discovered the monetary stimulus is as well. Apparently, Sarah Palin is going to be talking to a trade group in Phoenix later today and is going to say the Fed, as you say, should cease and desist the monetary policy that the Fed chairman announced last week, saying essentially it's inflationary, it's going to hurt everyday consumers, it's dangerous, let's back off, which is an interesting position to take, but it's kind of in keeping with other things you're hearing from the Republican side of the aisle. For example, the House Republicans have just invited Thomas Honig, who was the Fed board member who voted against the quantitative easing, to speak to the Republican conference in a few days. So you've clearly got some signals being sent from the Republicans that are not happy with the Fed.
And Alan, this morning we hear that the president has been weighing in on this too, but on the other side saying, yes, this is the right thing to do. We need to get America's economy going, and that's right. And again, making it political, but just from the other side.
Yeah, look, there used to be this notion. Actually, John, as I remember, John Hilsenrath wrote about this more than a year ago. That the Fed is taking extraordinary, historic actions here, and inevitably that's going to call into question the traditional kind of independence, hands-off view that presidents and financial ministers took towards the Fed. They're running economic policy. You can't expect the president of the United States to stay silent. You can't expect other world leaders to stay silent.
You know, I would say it isn't that unusual for the Fed to become a political football. I mean, it was a political football last year. We had financial regulatory reform, and the Fed, you know, Ben Bernanke spent most of last year fighting for his life to make sure that the Fed, you know, that its independence wasn't hit. There's also just another couple of examples. You know, back in the early 90s when we were going through a recession, President Bush, the first President Bush, attacked the Fed for not cutting interest rates quickly enough. And in the 80s, farmers surrounded the Fed with tractors because they were so upset about how high interest rates were.
And that's reminiscent
in controversial times, you're going to see this.
But over time, what this does is undermine the independence of the Federal Reserve. And when you have the Fed, in effect, they are monetizing the debt. As you've written, that used to be verboten, you know,
right.
We didn't monetize the debt. That's what they're doing right now. They're taking unusual actions. Inevitably, that's going to get politicians involved, and it does threaten the long-term independence of the institution.
I would say that bad policy will threaten the independence of the Fed. You know, the Fed did all of these really unconventional things during the crisis. They came out of the regulatory reform unharmed. If what they're doing now does damage, if we get inflation, if we get some new asset bubble, then the Fed's independence gets hurt. But, you know, if we're looking a year from now and growth has picked up and unemployment has come down, everyone's going to forget what Sal Palin said.
I don't want to forget Jerry Seib, who's still with us in Washington, D.C. Jerry, was it unreasonable for anyone to actually believe that the Fed could walk the tightrope and not become politicized in somewhat in the way that it's becoming at the moment? Was that just an unreasonable expectation?
Well, I agree with John. It's been politicized in the past, but this is an unusual outbreak of it right now. But I also think that John made a really good point, one that Richard Fisher, the president of the Dallas Fed, made today, which is that one of the dangers here is that these actions might actually politicize the Fed in and of themselves, which is, to his point, was if you drive down interest rates so that small savers and retirees make no money on their savings, meanwhile, people who are beneficiaries of easy money in the corporate world reap big benefits, you're going to create a political problem. That's what's going to politicize the Fed. So there are dangers in every direction for the Fed right now.
Yeah, not an unreasonable comment there, right?
I mean, the interest rate point is an important one that, you know, a lot of savers right now are seeing their returns on bonds going kind of lower and lower and lower, and especially older retirees.
It's like a tax on capital in a way. It's so low you have to draw down the actual capital.
It's a very unusual, bold position that has been staked out by the Federal Reserve, and we shouldn't be surprised that it causes a great debate among politicians, or that it becomes the centerpiece of the discussions in South Korea that are coming up. We're hearing, when you have the finance minister of Germany, the Japanese prime minister coming out and attacking Ben Bernanke, you know that those are going to be contentious discussions.
And even the Fed itself is somewhat divided. We have a report here saying Kevin Walsh, he thinks it might not even work, and that's someone within the Fed.
That's a good point, John. That one vote out there is indicative of a broader split, right?
Right. Yeah, there is. We identified 7 people back a couple months ago who were uncomfortable with an even more timid action that the Fed took. I think one of the important things here is that there is a view out there that this Fed's $600 billion of stimulus wasn't nearly enough, and that they need to be doing more and more over the next few months. I mean, the furor that we're seeing right now, I think, is an example of how hard it's going to be for Ben Bernanke to do any more. So for the people who are expecting the Fed to do $1 trillion, $2 trillion, $4 trillion worth of bond buying, this is a sign, hey,
look,
you better restrain that optimism.
And look, part of the problem here is that the Fed is the only game in town. Yeah, I mean, we're not going to see more stimulus spending from the federal government. Clearly, we talk about extending the tax cuts, but that's not tax cuts. That's the tax regime that's been in place for a decade. So you're not going to see stimulus on the other side, coming from the fiscal side of the equation.
No, you're not. And it looks like you're going to. Oh, I'm sorry. Is that Jerry Seib weighing in?
Yeah, I was just going to make one point as a footnote. One of the things you're seeing here is that this is not just a more Republican Congress that's coming in, but it's a more populist Republican Congress, and this is what you're going to get as a result of it. Some of this rhetoric is predictable.
So I think we're going to see the Fed kicked around a bit more as a political football for a while. It seems that way to me, anyway. Thank you, Jerry Seib with the Wall Street Journal in Washington, D.C. Thank you, John Hiltonrath and Alan Murray. Great discussion. I'm being told we have to leave it there, otherwise I'll get in trouble.
Thanks a lot. Let's leave it there.
Let's leave it there. Thank you very much. We turn now to the Markets Hub segment. Christina Peterson joining me on the set now to talk about markets and gold reaching yet another record high.
Yes, it was sort of a quiet day in the market, Simon. Investors took a pause today. We had a big move last week. The Dow was up almost 3%. So people just retreated a bit, but you did see people flocking to the safety of gold. It settled above $1,400 an ounce.
For the first time in history.
For the first time. And we also saw silver and copper at 2010 highs. So big day for metals. And, the dollar was up because the euro was down on some Eurozone concerns, but mostly people just sort of took a step back.
They took a step back, and the metals prices, gold, silver, copper, going to these highs and the record high of gold, a sign that the quantitative easing of the Fed is in fact having its desired effect. It's raising the prices of goods and services. Well, goods in this case.
I think there are mixed viewpoints on this. Some people think that, we could see QE to boost, actually contribute to inflation in some of the commodities, and people are a little nervous. Other people think that's not a problem now. We'll worry about that if we see it.
And when we do see it, we will worry about it. Thank you very much,
Great.
Christina Peterson of Dow Jones Newswire. Catch Christina and the gang weekdays at 11. We turn now to Laura Landry, who's going to join us on the set to explain what pre-hypertension is and why it is the new normal. And Laura, these medical stories always fun, always leave me feeling a little lightheaded. Okay. What is pre-hypertension?
Well, it used to be considered normal, actually. It used to be kind of borderline hypertension, but people didn't really treat it. They didn't talk about it. And it basically means that your blood pressure is veering towards hypertension, which means you're going to be at higher risk for a stroke, heart disease, just all kinds of heart failure and things like that.
Let's put some numbers around this, because we all go to the doctor. Hopefully we go once a year. We get the checkup, and they have that thing on your arm. They squeeze
blood pressure
your arm.
cup. Yes, it feels like it's going to burst.
So
exactly.
If you're like when I last went, it was 90/60 approximately. Is that good?
Yeah, you're okay. I mean, really, what they consider high blood pressure now is 140/90. So you're looking at stage 1 hypertension at that point. It used to be that right now 120/80 is what you want. That's normal. But anything between that and the 140/90, you're in that pre-hypertensive phase. And there are drugs that can bring it down, and there's some debate about whether you should take them or not, but it's all about lifestyle modification.
Actually, it's all about very simple decisions. So quitting smoking is
right.
one of them.
Weight is big.
We have a graphic here.
Right.
Lose some weight.
Lose a lot of weight.
Smoke not at all.
Not you. You don't have to lose weight, but you
don't drink.
You
can
drink
terrible.
you can have moderate alcohol consumption.
Okay, moderate.
They don't want to take all fabulous things away from you, but smoking, forget about it. Exercise.
Lower your salting.
Yes.
Take the stairs, not the elevator.
Exactly.
Don't smoke, keep active.
Right, and sodium is so important. The chips, the crisps, it has to go.
It has to go, as probably do the sugary drinks, because that's a weight thing, right?
Well, it's all, yes. I mean, weight control is about controlling your calories, but, sodium, the recommendation was something like 2,400 milligrams a day. It's now more like 1,500. So, and you have to look at every little label, and it's in everything you eat. So you just have to really carefully watch your labels.
Well, every time you come come on, I want to be healthier, and I'm going to try to be. Thank you very much, Laura Landra of the Wall Street Journal. Check out the article on WSJ.com. I'm Simon Constable, and that's it. That's our show. That's the News Hub for now. We'll be back 8:30 tomorrow, where Kelly Evans will have all the news you need to know before the opening bell. Have a great afternoon.